Hey, welcome back, everybody. Good to be here. Good to see you. Ed Ponsi here, your FX editor, here on behalf of FX Street. Pardon me. Well, welcome to November 7th. Tomorrow there's a small election being held in the U.S. You may have heard about this. So I wanted to. There's so many people asking about how to trade the election or should I trade the election or what should I do? What should I not do? And there's so many questions out there. And I thought now would be a good time to take a look at what we know from recent elections and things of that nature so that we can sort of create a game plan or a battle plan and figure out the best way to make money out of this situation, or maybe the best way not to lose money. I think a lot of people, just based on what I'm hearing and what I'm seeing, I think a lot of people are going to lose a lot of money this week. And here's why. First of all, they're using the Mexican peso as an indicator. Right? So yesterday, the FBI said they didn't, they went through 650,000 emails in 8 days and said they didn't find anything. Now, there's only 691,000 seconds in 8 days, but I'll leave that to the mathematicians to worry about. What I want to worry about is, there's a big move in the peso. Is that telling us something? Everyone thinks it's telling us something. Right? And that's everything you read and everything you see. Oh, the peso's doing this, so therefore, right? It's an indicator. Well, let's go back 6 months to June when the UK was preparing to vote on the European Union referendum. And at that time, the British pound was the indicator that people were using. Here's the British pound. And here's the run-up. You can see the pound is going to run from almost 140 to almost 150. So not quite 1,000 pips, but almost 1,000 pips in about a little over a week. The pound runs 1,000 pips. Why? Because the pound was the indicator, and the pound was just like the peso today is the indicator that's telling everyone what is going to happen. 6 months ago, the British pound was the indicator that was telling everyone what was going to happen. And people were buying the pound, and they drove the pound up 1,000 pips. And then they got their heads torn off as the pound drops more than 2,000 pips in fairly short order. So anyone who bought the pound because they thought the pound was telling them something about the election is probably still trying to dig out of that hole. So the first thing that we learn about trading the election is this: ignore the indicator. Okay, people are looking at the Mexican peso, and you turn on the TV and they're talking about the Mexican peso. Those people on TV don't have a clue. Okay, they just look at the chart and they say, oh, well, this happened, and so A must mean that B will happen. And that's the exact same type of thinking that got people hurt 6 months ago. So my goal is that you don't get hurt. So if you're buying or selling the Mexican peso right now based on this news, so-called news and ideas, I'd say huge chance. You're taking a tremendous chance by placing trades based on trading the peso itself. You're taking a tremendous chance, and that's one. So rule number one, I think you can say, ignore the indicator. The press is all over the Mexican peso. The television networks are all over the Mexican peso because they think they've found something. Just remember this. And then people turn on the television and they think the people on the television know what they're talking about. The people on the television do not always know what they're talking about. All they know is A happened and the peso did this, B happened and the peso did that. Here's the big mistake that they're making. The peso is not the indicator. It's not the dog, it's the tail, right? The dog, the tail doesn't wag the dog. The dog wags the tail, and the peso is the tail, not the dog. They think it's the dog. They're convinced that the peso is the dog. I'm telling you the peso is the tail. The peso is reactionary, not predictive. And it's reacting to things that don't necessarily tell you anything about the outcome of the election. Now, when the British pound had this amazing run prior to the Brexit vote, what was driving it here? What kept driving the pound higher and higher, and even caused it to gap much higher over a weekend? What was that one factor that was causing this activity to occur? That factor was polling data, information from polls. The polls were relentlessly pro-Remain, right? Anti-Brexit, pro-Remain. And every poll that came out, traders became more and more certain of themselves that Brexit would never happen, and therefore the pound went up. Think about that for a second. It was polling data that was making this happen. What do we know about polling data? Is it always accurate? I would like to point this out. What we see right now in the polling data for the U.S. elections is very similar to what we saw prior to Brexit. The polling data showed one side ahead, and as the very last day approaches, the lead is actually widening just a little bit. Do you know this is exactly what happened with Brexit? That the polls always showed Remain in the lead, and at the very end, the lead got bigger, not smaller. So if you know that, why would you be trading this election based on polls? You know, I tried to warn people. I went on to CNBC and told them, hey, don't always believe the polls. Right? And I'll shoot you a link if you want to watch it. But the polls are not always correct. The polls were incorrect for Brexit, and this was shot several days before Brexit, June 20th. I think the Brexit vote was June 23rd. So this is 3 days before the vote. And I'm telling people, listen, polling data is not always accurate. In fact, it's often very inaccurate. Why? Well, it's not so simple as you might think. A polling company doesn't just call up 1,000 random people and ask them how they're going to vote. Polls have sample sizes, and the sample sizes can be adjusted. And those sample sizes may not have any bearing on the mixture of people that are going to come out to vote. So many of the polls have sample sizes that are skewed toward one side or the other. But the fact is, what's the name of the polling company that always gets it right? I'm not aware of one. Okay, polls are frequently incorrect. Anyway, hopefully I saved some people some money by going on CNBC and pointing this out, and hopefully I'm saving somebody here some money by pointing it out now. Okay. So that's one thing. It's one. Number one is forget about the indicator. The indicator this time around is the Mexican peso. Last time it was the British pound, right? Forget about the indicator. Part two, forget about the polls. The polls don't mean anything. You know what part three is? Part three is your stop is not going to protect you. Your stop is not going to protect you. Okay, if there's a tremendously volatile event, such as we saw with Brexit, see that big candle? That's like the biggest one-day candle in the British pound ever. When people's stops were getting hit on that day, that night, I should say for me, when their stops were getting hit, they were getting filled, I'm not joking, 300 pips away from where the stop was placed. Can you believe that? Can you imagine that? Their stops were getting filled 300 pips away from where they were placed. Now, if you can't count on your stop, if you can't depend on your stops, then you can't define your risk. You can't tell me how much money you're risking on a trade if your stop is unreliable. And I'll tell you this, one of the reasons why I trade Forex is because the stops are reliable. I started out trading stocks. In stock trading, your stops are not reliable. Okay? They're not reliable. And that's one of the reasons why I switched to Forex, because it's so much more liquid and the stops are reliable. But there are going to be times in a fast market where your stops are not going to be reliable, even in Forex. This could be one of them. So if you're trading this event, and then you're gambling. And what concerns me even more is that if somebody is trying to convince you that you should be trading this event, then one of two things is happening. Either this person or persons who is trying to get you to trade this election, they either don't know that the stops are probably going to be useless and therefore people are going to be hurt. So they're ignorant to the situation, which is pretty bad if you're an educator, right? So if you're trying to convince people to trade this, you're either ignorant to the situation, ignorant to the facts that the stops are going to be useless and people are going to be hurt, or worse, you're not ignorant to the situation. You know the stops are useless. You know that people are going to be hurt. And here you are anyway telling people to trade the election. How bad is that? Okay, so 3 things so far that we've covered. Forget about the indicator. Forget about the Mexican peso. It's not the dog, it's the tail. Part 2 is forget about the polls, because polls are frequently wrong. Part 3 is your stop is probably going to be useless. And I'll add to that also. For folks who are trading, maybe you're not trading Forex, maybe you're trading the S&P or something else. If you want to protect yourself with a stop in the stock market, it's going to be even more useless, or in the commodities market, or with gold, or with silver. Your stop is going to be useless. And if you want to purchase an option, the option is not going to be useless, but it's going to be very expensive. Everyone knows that there is a high degree of volatility that is likely to occur. Because of that, options are priced accordingly. When volatility is high, or anticipated to become high, the price of options, which is a method of protection, the price of the options goes higher. So if you're thinking of, well, Ed, I'm not going to protect myself with a stop, I'm going to protect myself with an option. Guess what? You're going to pay a lot for that option because everyone has the same idea that you do. Everyone's trying to protect themselves one way or another. So far, there are 4 things that you need to know. Ignore the peso. Ignore the polls. Your stop is useless or could be useless. And options are likely to be very expensive. Pretty depressing so far, right? I'm sorry, I have to tell it like it is. And all the hustlers out there are trying to tell you, yeah, you should trade this. You should trade this. They either don't know that people are going to get hurt, or worse, they do know that people are going to get hurt, but hey, maybe they can sell something. Maybe they can sell something. And that's why they want you to trade and show up at their little event or whatever. Okay? Pretty bad stuff. Pretty ugly. But it's not all bad news. And somebody out there actually not kind of nailed it. I think so. Now I'm going to go to the questions now. So far it's been pretty downbeat, right? It's been pretty down. I know. It's Monday morning too over here too. So it's Monday morning. I think it's raining and I'm telling you nothing but bad news. But actually I'm not telling you bad news. Because I'm undoing all this nonsense that people are getting stuck in their heads that they're supposed to be trading this event. Hopefully I'm going to save you a bunch of money. Right? Because these are the type of events where people get their accounts blown to smithereens. And that's what we don't want. Now I'm going to jump back and jump through your questions. And then we'll pick it up again. Joan says, if the election causes big volatility, how about buy VIX calls or a straddle on the market? I'm not sure. Okay, and guess not a good idea. Says, yeah, because Joan says, and we already sort of dealt with that. So if I pull up any measure of volatility, like the VIX, can I pull that up? Give me a second. I can pull up a VIX ETF. Hold on one second. VXX, I think, is the symbol. Hold on. Now, okay. So look at the price you're paying is skyrocketing. The cost of insuring your trade is skyrocketing. Okay? And that's why I'm telling you right now, it might work, but you have to pay more to place that trade because all options, both puts and calls, are going up in price in anticipation of a big surge in volatility. Everybody has that same idea, in other words. And if you think of the VIX as insurance, or as those options as an insurance policy, well, the cost of the insurance is going higher, you know, as it should. I mean, there's probably going to be a lot of volatility. Who knows? I mean, this result, we may not have a result in 24 hours. What do you think of that? What if this drags on for weeks? You think I'm crazy? That happened less than 15 years ago. I'm sorry. It happened 16 years ago. Was it the 2000 election? I don't think the results were finalized for weeks. Think about it. Okay, so what about that? How's that? Okay, so all right. So far it's all bad stuff, but it's not bad at all because I'm protecting you. But I'm going to show you one way where you might be able to make money, so you got to stick with me. Another few minutes here. That's okay. We don't have to trade Brexit or the U.S. elections. Exactly. Exactly, says Carlos. What was really unethical was the SNB unexpected ending the cap at 120 and not announcing it. Yeah, that was absurd. I got to agree 100% with Carlos here. That's okay. We don't have to trade Brexit. We don't have to trade the elections. But what was really unethical was the Swiss National Bank unexpectedly pulling the rug out from 120. They didn't have to do it that way. They didn't. I mean, look, they had put themselves in a very strange situation. But think of all the damage that they caused. By this actually happens over a matter of seconds. The price drops from 120, it drops 2,000 pips in a matter of seconds because of the way the Swiss National Bank chose to handle this. Now, I'll bet you anything they were short. I mean, no, they weren't short. I know it sounds like they should be, but actually they were way long. They were buying euros and selling Swiss francs, and it turns out that didn't work out. But yeah, but the way they went about that, they just shouldn't intervene. If you're going to do stuff like that, just don't intervene. You know? So I agree. That was really unethical. Yes, I have seen that options are expensive, says Joan. Yeah, correct, right? And indeed, says Carlos. Yeah, this is so. Yeah, the options are way up there. So like, but I'm telling you, 99% of the stuff you're hearing out there is. Someone who I actually respect on Twitter today said, well, the peso is the most accurate indicator of the election. And I'm thinking, really, based on what? How do you figure it's the most accurate? And could you please scientifically back that up? It's not even predicting the moves. It's reacting to moves. And the trick to making money on something like this, if there is a trick, it's not predicting, it's reacting. Now, everything I do basically is not predicting and reacting. So is it any surprise that if I were going to trade this event, it would be a non-prediction type of trade? In other words, most of the people who are trying to trade this election are trying to predict what is going to happen in the election. And I think that's a mistake because I know that nobody knows what's going to happen. And you know this too, right? I don't care how confident somebody sounds or how good they look on television. I know that that person does not know. I don't know, they don't know, nobody knows. And if you know this, you're ahead of the game. Because if you understand what I'm saying, then you're not going to try to predict what happens next. But we do have a pretty good idea that there might be an increase in volatility. Is that a reasonable expectation? Yeah, I think so. I think you could see a big move in volatility. Now, so how do you do that? How would you trade that? Let's say that going into Brexit is right here. You can see the S&P 500 is going up. And the stock market closes, and then the vote comes out that night. You don't know what's going to happen next, but you know the market's probably going to overreact, right? And this is what I was saying back here too. Whatever the outcome, whoops. Why can't I make this work? Here we go. Whatever the outcome, expect markets to overreact. Okay? So if you're expecting the markets to overreact, what can you do? Let's go back to Brexit. Here's the last close of the S&P 500 ahead of Brexit. Now, this is not something that I did, but let's just say hypothetically, you know the price is going to shoot way far in one direction or the other, but you don't know which way. How can you make money on that? I could place a buy order way down low. And I could place a sell order way up high. It's what I call a dream trade. Like, what's your dream price for buying Apple? You want to buy Apple for 80? Maybe you're going to get a chance to do that this week. So maybe you throw an order out there for Apple at 80. It's probably not going to execute, but you never know, because you know there's going to be a lot of volatility. Or maybe you want to sell Apple at 140. Is that likely to happen? No, but it just might happen. So you throw an order out there to buy Apple at 80, and you throw another order out there to sell it at 140. And you could do an OCO, one cancels the other, or not. Or not. But that's what I call a dream trade. Like, what's your dream price? Do you want to buy the euro at 105? Throw an order out there. What do you got to lose? Or maybe you want to sell British pounds at 130. Go for it. Way far away. Now, so for example, back to the S&P 500 example, right? S&P 500 closes here, and the next thing that happens is going to be, we're going to get the result, either Brexit or Remain, one or the other. So let's say after the close here, Joe Trader puts a sell order way up high, 100 points higher on the S&P 500, and puts a buy order way down low, 100 points lower on the S&P 500. 100 points lower would be what? If this is 2010, 2110, then 2010. It's not even on the board here. 2010 would be 100 points lower. And 2210 would be 100 points higher. Market's never been to 2210, but you put it out there anyway because you might get it. Right? So what happens? 2 days later, boom, your order 100 points lower from the close here. That order executes right here. 100 points lower. You got your dream price. You bought the S&P 500 at 2,000. Lucky you, right? Because over the next few weeks, it's going to go up 160 points, which is big, big move for the S&P 500. If it's Trump, will the market plunge down? I mean, the assumption is that if Trump wins, the stock market falls, and if Trump loses, if Clinton wins, the stock market goes up. That's the assumption. And but again, I'm not trying to predict what's going to happen. I'm not really interested in prediction. I'm interested in reaction. So even though that's what everybody expects, if everybody's expecting one thing, very often something different happens. I mean, right here, the stock market was supposed to go to hell in a handbasket because of Brexit. Instead, it hits an all-time high a couple weeks later. So everyone thought the stock market would fall on Brexit too. It did for 2 days, and then it hits an all-time high. So go figure. Nobody knew. Nobody knew that was going to happen. Right? So beware of all these predictions and things of that nature, and a million different articles and TV hits that tell you, if this candidate wins, this is what's going to happen. It's fun speculation, but just remember, they have to fill 17 hours of programming every day and on your local television station. And if you just were to trot out someone who was perfectly honest, who said, look, nobody knows, okay? If you were to do that, you couldn't fill 17 hours of programming with that. So you trot out all these people who have really strong opinions one way or the other. But opinions are worthless. Opinions are worthless, right? Protect yourself. Okay? What currency pair can you do a dream trade? Well, like I said, something like if you wanted to, like something like Euro USD, right? Like maybe I could get Euro, it's currently at 111. Maybe I could get it at 106. Imagine, I'm dreaming about buying it down here. I would have loved to have bought it. That would be a dream if I had bought it down here. Well, I might just get my chance. It could happen. Okay, something like that, like buying euro at 106 or shorting it at 115. Those are dream numbers. They're highly unlikely to happen. But wow, if you could, would you? That's the question. Okay. All right. And just going to, great comments from everyone. Thanks very much. So we don't know what happens is the reality. The market will be rigged tomorrow night, says Carlos. Excellent. Very good. Is that a straddle? I think you could consider it that a straddle. In some folks would consider that a straddle, although it is not a straddle in terms of the options strategy. But yeah, some people would call that a straddle, yes. What currency pair can you do a dream trade? Like I said, I just threw it out there for euro, but really any currency pair where you think it's just a ridiculous number that's just highly unlikely to be hit, that's very, very far away from the market, would take a huge move. Those are the type of things that I'm talking about as far as a dream trade. I wake up at night dreaming that I bought euro at 106. Well, maybe I get my chance now. Stuff like that. Okay? All right. Great session, everyone. I hope this clears it up. I think we should say this is basically your survival guide for the election. So tune out all the noise. Forget the peso. Forget the polls. Turn off your TV. Go play with your kids. Go feed your fish. Practice your putting. Go to the gym. Do something useful. Okay? And let everyone else torture themselves with this nonsense and wreck their accounts on these ridiculous trade the election nonsense webinars and nonsense like of this nature. Okay, gang, I'm out of here. I'll see you. Excellent session. Well, thank you very much, Joan. I appreciate it. I'm out of here, but I'll be back in a half hour. When I come back, we're just going to look at charts and we're going to take your questions. And so I hope you'll come back and join us 30 minutes from now. Thanks again for listening. My name is Ed Ponsi.